Welcome to Cheques and Balances. I'm Michael Vincent. This is James Blair, and this week the sky's falling, the markets are in the red, everything's crashing. It's a complete bloodbath. James, what am I going to do?
So Mike, before I answer your question about why is the world caving in on itself, welcome back to 2022. First episode back, and we're also back with the sign, the bricks behind. We went and did some different things, but it's nice to be home.
It is nice to be home, and I think we've got to make a special announcement. 2022, someone got married.
Oh yeah, sorry ladies, sorry gentlemen, try later. But no, had a great time down in Queenstown. Yep. Had my guy down by my side. He was like, "Are you sure you want to do this?"
I even showed up in a wedding dress.
Yeah, but we had a great time. But let's get on to the main question going on at the moment. People aren't calling me going, "Hey James, how was the wedding?" It would be nice if some people called asking about that. But what they're really asking about, Mike, is what's happening with the markets at the moment? Should I sell everything? Is it the end? Should I go into cash? Wait for the perfect time to re-enter the market when everything is at the bottom?
Yeah, it's sort of a funny time in the markets, right? Because look, January and February are usually pretty soft months in the market anyway, but this year in particular, there seems to be something else going on. There's so much stuff in the media about this.
Yeah, I would argue that there always feels to be a lot going on when it's just another year.
Yeah.
But so there's a couple of big numbers first up. Firstly, the Dow Jones has dropped about, the NASDAQ's dropped about 13%, the S&P 500 about 10%, the NZX 50 about 8%.
8%, ooh, look out. They went from a market cap of what, $10 to $8, and now they're back at 9 or something?
All right, London, if you're not happy, go home. So, but you know, if you've got a reasonable amount of cash, it's quite a bit of volatility earlier the year. We're getting asked questions, what is happening?
Yeah, and that counts for us on the home loan side of things as well. I've got a lot of my clients calling me saying, "Hey Mike, first home buyer, need that deposit, it's all in KiwiSaver, where's it all gone?"
Yeah, just on a side note, if you are a first home buyer watching this and all your money is in a growth fund, get out of the growth fund, get into a conservative fund, align it with your time frame. If you've got all your money in NFTs, you're probably in even more trouble. So we might touch on that a little bit later.
Yeah.
So I guess the first question is, why are the markets dropping, Mike? Like what's going on?
Well, I mean, this is probably more of a question for you, James. So let me rephrase that. James, as the investment guy, why are the markets dropping?
Man, hopefully I can answer that question. So there's a few things going on. The first is, I don't know if you're aware, Mike, there's this thing called a global pandemic happening at the moment.
I had gone straight over the top of my head.
I know, that's why you can't get out of the country. That's why you can't get back to London. So you might go, well, that's a bit of old news. The pandemic is having, I feel like, some flow-on impacts to some other areas which is causing that uncertainty. The first one being is, firstly, that word uncertainty. There's still, we're 2 years into this, there's supply chain issues still going on. The world hasn't opened up as expected. There's all these new variants coming out. So it does create uncertainty.
And when you get uncertainty in the market, what that generally means that people save more and spend less. Now, when people spend less, it has that flow-on effect to businesses. They're not getting that revenue coming through the front door. And this isn't just small mom and pop businesses. This is right up to big corporations as well. As that demand softens, so does their earnings. And that's when you're going to get their share price dropping off the back of those earnings reports.
Yeah, and with that as well, when the global pandemic started, world banks turned around and were like, "Mike, we can't have everybody losing their jobs. We can't have people feeling uncertain.
Turn the printers on.
Turn the printers on, pump a bunch of money into the economy." And then, so that did a pretty good job, right? A lot of people managed to keep their jobs. As many businesses as possible kept going. Yep. But there's a flow-on impact to that, right? Unemployment is at historic lows. A lot of economies around the world are pumping quite well, opposed to specific sectors obviously really struggling, which has resulted in this thing that's popped up, which we haven't seen in a pretty bloody long time, this word called inflation.
Yeah, so everyone who is subscribing to that new monetary policy or that new monetary principles, inflation's back, baby.
So inflation is where the cost of living is going up. People are feeling pretty wealthy. There's money circulating. The costs of assets are appreciating over time. Now, world banks, once again, turn back around and go, whoa, 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 whoa. We're happy everybody's having a good time, but we can't have too much of a good time. We can't have prices going out of control and have hyperinflation or anything too crazy happening. So what they do is they raise the cost of money, which is, of course, called when interest rates go up. So that has a few different flow-on impacts. In terms of like the consumer, your mortgage, while you might have your mortgage fixed for a long period of time and it might not impact you straight away you're thinking, oh, when my mortgage does roll off, my interest rate's going to be high, or going to be starting to think about this, maybe being a little bit more conservative. The other piece is businesses. Businesses have loans. If they want to reinvest, the cost of money has gone up, which makes people go, businesses go, not sure what I should do here.
Yeah, and that's a really important point, especially for the New Zealand economy. A lot of business funding in the New Zealand economy comes from residential-backed mortgages, which means that as those interest rates rise, there's a knock-on effect to the businesses. And obviously, as interest rate rises as well, it becomes harder for them to actually get the loans because they have to service it at a higher rate. So you do see that flow on into businesses.
Yeah, and then there's probably the biggest impact of the bunch, which interest rates start going up, term deposit rates start going up, bond yields start going up. People go, well, I've had 14 years of good returns since the global financial crisis. You might say, James, there was March 2020 when my investments dropped. That was a little blip in the radar. That's not a real correction. Real corrections last 18 months. So people, there's high valuations on businesses compared to their earnings. People thinking they've had huge returns over a long period of time, more uncertainty coming into the market. They go, those term deposits, those bonds, they're not looking too bad. So it's encouraging some investors to move from riskier assets to more conservative assets, which is also having an impact on where share markets are at the moment.
Yeah, and as people sell off those riskier assets, all of those stocks, those sorts of things, and move into bonds, naturally that price is going to keep dropping. And you're seeing that pretty heavily in the market too.
Yeah, and the last piece of the equation, which is having an impact at the moment, is Russia and Ukraine are kind of standing on each side of where they are and going, what's going to happen next? Is there going to be significant military action? What's going to happen in other parts of the world? So it just creates more uncertainty.
All right, so there goes the doom and gloom. I hear about it every day on the radio. I see it on stuff. I read it on Facebook. I believe it all. James, what happens next and what should I do?
I've told you not to stay out of those Facebook forums, right? They're just no good for you.
But the comments section, James, the comments section.
Yeah, the comments
section.
Tell
me how pretty I am.
The comments section can be a little bit of fun. I told you to stop catfishing as well. So in terms of what will happen next, I think is probably a good question.
Yeah.
What will happen next? If anybody tells you what will happen next, you should run in the opposite direction. Because the real answer is everyone gets paid to have an opinion, but nobody's really got any bloody idea.
If you do hear what's going to happen next, so just email me, michael@lighthousefinancial.co.nz. Give me those hot tips.
Yeah. So the real piece there is people do not know what is going to happen next. Now, if you were to ask my opinion, Mike, because we also need to have an opinion on the show, I would say we've had 14 years of good returns. We've had the share market over the last 2 years increase about 50%. You've got all of this uncertainty, which I discussed before. Valuations on businesses compared to earnings are pretty out of whack. If there was a correction, if there was periods of flat returns or negative returns, I'm not going to be surprised.
Yeah. Okay. So let's say that I'm taking James's opinion on this. I think there's going to be a market correction, a period where the market's going to be flat or decline. Do I get those paper hands out? Do I start selling?
What should you do?
What should I do?
The question is, you should stick to your plan. So it's really important to remember that markets go in cycles. In a 7-year cycle, there's going to be 3 really good years. James is your best mate, your advisor's your best friend, you're sending out those Christmas cards and getting invited over to the barbecue. There's probably going to be 3 boring years where you go, what's the point of all of this? I don't really know if this is worthwhile. There's going to be 1 bad year where my face is on your dartboard at home and you're just getting out a lot of therapy, throwing darts and hitting me in the noggin. So you've got to remember that markets operate in cycles. What does that mean? Is this kind of volatility is pretty normal. I appreciate it will feel scary and feel uncertain, but you've just got to remember that you can't time the markets. There's some stat out there, Mike, that if the share market does 8% per annum, if you miss the best 30 days of the year, your return half. So you've got to make sure you're in the market for the long term and play the law of averages. If you have long-term goals, if you are investing over 30 years, say you're 35 and you're in your KiwiSaver, it does not matter if the market is up or down. You know what the long-term averages will be, and that's the game you've got to play. If you've got shorter term goals, you should probably reconsider the assets you're in, despite whether markets are up or markets are down.
Yeah, and that's a really important point there, and it's something you always hear us come back to. Stick to the plan, think about the long term. We're investing for the long term here. This isn't a get rich quick scheme. We need to be looking at those time horizons.
Yeah, once again, any get rich schemes, please email Michael@Lighthouse. So I know market volatility is scary, especially if you're not thinking about money or not as maybe financially literate as others, and everybody has got an opinion. Just remember that it's not if there is a correction, it's when it will happen. And if you are young enough, you're going to experience multiple corrections along your lifetime.
Yeah.
It's about sticking to the plan, appreciate that there will be good, bad, and ugly times, but you need to focus on your emotions, your control, and the long-term plan.
Yep.
So any questions, feel free to pop it in the comments section, email us at info@lighthousefinancial.co.nz. Otherwise, we'll see you next week. We've got lots of exciting stuff lined up for this year. We've got special guests. We're talking about weddings, engagement rings. We're talking about health insurance. We're talking next week about the triple CFA changes. Mike, nobody can get a mortgage, so we're going to also talk about that.
Yeah.
So we'll see you next week.
Cheers.